Hey traders, Jason here from Levy Brothers. So I'm going to do an update of my State of the Market series, talk about the indexes, some breadth, and then get into some other individual charts. I'll sum it up here at the beginning, and then I'll sum it up at the end. Overall, market's in great shape. Indexes are in great shape. We just had one of the greatest 3-month rallies in history. Lots and lots of good setups, lots of obvious themes playing out. It's been, the market went from being really, really bad to extremely good. Some huge profits that were available. Breadth has been supportive. Just everything is just clicking, but I'm starting to see some warnings in the near term, and specifically I'm seeing warnings in what I would consider to be my number one indicator. So it's something that I don't ignore. So let's get into this. All right, so here's the S&P 500 daily chart. You can see V bottom, this is all the tariff stuff. And then the market realized that either they're not worried about tariffs, or they think tariffs aren't a big deal, or they think tariffs will go away, or for some reason, Wall Street's just simply not worried at all. So big bottom there, higher, low, testing the 21 there, testing the 21 there, testing the 21 there. We're due for another test of the 21, so I could certainly see a 100-point pullback. Purely based on the extent of the gains, but otherwise the market is strong, it's healthy, it's trending up, it's at all-time highs. Not a whole lot to dislike, especially when you consider how many good trades there have been over the last couple months. All right, getting into breadth. Here's the S&P 500 versus the 5-day moving average of the NYSE AD line. So we got a negative divergence in place here. You see there, market made a higher high last week, but when that was taking place, you had a lower high from this indicator, and now we're below zero. Okay, so for over the last 5 days, decliners have actually outnumbered advancers, even though the market is doing really well overall. It's a very short-term warning that tends to lead to a little bit of softness, but it means nothing as far as the big picture goes. Because if we back up a little bit and we look at the cumulative AD line, there you go. Just up, the SP up top. The first sign of strength was when the market was falling so much over here that the AD line didn't even fall that much. It just kind of lower highs, lower lows traded within a rectangle pattern. You would have expected with this kind of a move that we'd have a much bigger move down here, but it didn't happen. That was a warning, to the bears that this isn't as bad as you think. And then of course we trended up and we got support from the 21. And again, we could have another test of the 21, but overall advancers have steadily beaten decliners. The market is in really good shape overall. Here is S&P 500 up top. This is the S&P stocks above their 20-day moving average and S&P stocks above their 50-day moving average. You could argue that we have slight negative divergences forming, okay, and that's fine, and that could lead to short-term weakness, but that's all. It's just some short-term weakness. There's lots of little divergences that take place, like right here, divergence, and what happened. The market just simply moved sideways a little bit for a couple weeks. So little divergences take place all the time. They tend to induce a little bit of a pullback or a little bit of a sideways movement. But overall, this looks really good. You have, in both cases, the prints are mostly above 50% going back to mid-April, late April. So more than 50% of stocks, oftentimes 60, 70, 80% of stocks are above their 20s, above their 50s. So participation is good. It's pretty broad. This is not a case where a small number of stocks are pulling the market higher. It's just market's in good shape. There's just good participation across the board. Same indicator with the NASDAQ up here. And this is NASDAQ 100 stocks above their 20, NASDAQ 100 stocks above their 50. Same thing. You got mostly prints for 3 months above 50%. Here you have mostly prints above 70%. Even if this were to pull back and drop below 50% and bounce, it'd be perfectly fine. Even if this were to bounce, come back to 50%, that's normal stuff. Okay, the market doesn't just get pinned at a high month after month after month. It needs to let out some air. So even if we got a pullback here, it's short term. Maybe you could say hey, things are a little bit soft, but in the near term or overall, you have to be bullish because participation has been very good. It's been broad-based. Lots of stocks are participating. Backing up, this is the S&P 500 versus S&P 500 stocks above their 200-day moving average. So we're using a longer-term moving average. We're still not up to highs from last year that we hit a few times. But relative to, here's the beginning of 2025. So we actually are at like a year-to-date high. Okay, so relative to just this year, where the market, went down and then went up, went down, went up, and then now it's at its highest level of the year. So not bad. There's still room to grow here. Okay, till we get to like the point where like there's participation is super good. But for now, I'd say it's progressing along. More and more stocks are reclaiming the 200, and I don't see anything major to be concerned about here. All right, now this is the S&P 500 up top versus the 5-day high-low. So how many stocks are making a 5-day high versus how many stocks are making a 5-day low. Like the other ones, we got a little divergence, higher high here, lower high there. Can lead to a little bit of softness in the very near term, but overall it doesn't mean anything as far as the market goes. Typically this indicator will go from 2,000 to minus 2,000, 2,000 to minus 2,000. That's actually normal for a healthy market. So the fact that we went up to 2,000 here and now are rotating down, it's normal stuff. Okay. Again, the market's not going to get pinned at a high level permanently. It needs to come back, let out some air, use whatever metaphor you want, like shake the tree a little bit, like pull back, let the weaker stocks reveal themselves. We don't want to trade them and let the stronger stocks reveal themselves. Those are obviously the ones we want to be in. So I see nothing, short term, you could argue that a little bit of a warning here, but overall looks fine. Here is the same thing, except we're using the 1 month high-low, and it's pretty much the same. It's like, yes, we got a little bit of a negative divergence here, okay, but we're above zero, and we're just in good shape. Let me see if I could, box this in. As long as we're like doing something like this, that's fine, okay? Moves up and moves down. As long as it's like steady, it's perfectly fine. When we get, you get into trouble when, this was a high here. That was a negative divergence that played out over the course of a longer period of time. And then obviously we got a bigger dip. We got an inability to recover much above zero and then a bigger dip. So that's, you can see that, most prints here below zero, and we got the big move down. Most prints right now, obviously above zero. So good shape overall, even if you wanted to argue that, this print here of 161 isn't, indicative of a strong market. Last one in this bunch, this is the S&P 500 versus the 52-week high-low. The S&P 500 is at a 52-week high-low, so why not look at how many stocks are doing the same? Same divergence plays out, higher high here, lower high here. You could argue, a little bit of weakness probably going to set in as less and less stocks participate. So like over here, there was like 250 stocks. The high-low is 250, and over here was probably more like 175. I'm just eyeballing this, maybe 160. So less stocks came along for the ride on the very last push higher right here. But overall, still in good shape. This has been steadily trending up, like some sort of linear regression line would say that this is, doing fine. As long as we don't get like, huge prints down here and then an inability to recover and it stays down here, we're doing fine. All right, so now the trouble. Okay, this is all standard stuff, breadth stuff. I think everyone has access to this stuff. I'm not doing anything that's like crazy. Successful trading has nothing to do with having access to some special indicator. It's more, it has more to do with the intangibles and how you trade. You can give the same chart to 10 different traders. They're going to have 10 different results. It's not the chart. It's the trader that makes the difference. So the problem I have right now with the market is that the number of individual stocks that are acting well has significantly dropped off. Okay, I am a bottom-up analyst. Okay, instead of just looking at the indexes and coming to the conclusion that they're in good shape, I'll look at 500 stocks, 600 stocks, 700 stocks, and with that, I'll get a sense for, are there a lot of stocks that are acting really well or are there not? Okay, and from looking at 500, 600, 700 charts, I'll pull out the best charts. And when times are really good, it's actually hard to narrow down a list because there's so many stocks that look good, but when times are not that good, it's kind of hard just to even have 10 or 15 good stocks to trade. Okay, so that's my number one indicator. It's a little bit subjective, but looking at several hundred charts and just pulling out the best ones and then saying, like, how many really good ones do I have, or how many really good ones don't I have? And that's my best indicator that I use, and that kind of tells you what's going on beneath the surface. And so for the last 3 months, it's been hard to narrow a list because there's so many, with robotics and AI and data centers and cryptos coming to life recently, and same thing with housing, and the list goes on and on, drones and aerospace. There's been like no shortage of really good stocks to trade and themes to trade, but right now I can't find hardly anything. There's just like nothing that jumps out that like screams trade me. Okay, there's just nothing there. So, and then when you look beneath the surface, you get, this is what I see. Here's CoreWeave, which topped, almost a month ago, and is down from 185 to 125. Okay, so this is one of those stocks that ran up huge, and it's kind of a sign that the animal spirits are alive. Okay, and that's a good sign. But when they die down, then you got to be a little bit more careful. People are less willing to just throw money around. So the fact that this is down so much in less than a month is actually telling that the market, traders, investors are no longer willing to just throw money around. They're going to be a little bit more cautious. Dave, another one that posted huge gains. You can see, 80, it went up like 3.5x or so, down hard from 280, 290 down to 200. Sezzle, same thing, huge gains, down from 185 to 135. You might say they needed to let out some air, but that's a sign. Okay, if suddenly the big huge winners are just letting out some air, then that's going to trickle elsewhere. Okay. Next one, Circle. We all know Circle. It went public, gapped up, went up huge. Went public at 30, topped out at 300. How about a 10x move in 2 weeks, 3 weeks? And obviously, when the market was making a new high last week, this was way off its high. So the inability to hold its gain, didn't even have to press higher, but the inability just to hold up here in the high 200s is a little bit of a warning that, hey, a little bit of selling's taking place. And if you want to argue that these are speculative names, new names, they don't really matter. There are some core groups. Here's the security group is broke down last week. So here's FTNT, huge move down Thursday, follow through Friday, now trading at one of its lowest levels since early May. CrowdStrike closed below its 21 on Thursday, follow through on Friday. So again, it's steady uptrend up, higher highs, higher lows, but it seems to be breaking down now. So that's a little bit of a warning. PanW clearly broke down, not just below its 21, but below its 50 now. Okta, which was already in a little bit of a downtrend, moving sideways, broke down last week. It's now at a 3-month low. Zscaler came down off a high. Now, this is normal stuff. Zscaler could easily just come down to the 50-day moving average, bounce around, and go back up. But it's just a sign in the near term that the wheels are starting to come off. Okay, so if I were to sum everything up here, and this, again, going back to what I said before I started showing these charts, is that there's just not that many good stocks to trade right now. It used to be, for 3 months, we had too many. It was hard to narrow a list. We can throw money at almost anything. It's starting to feel like you got to be a little bit more particular, a little bit more specific. Okay, you gotta be a better stock picker. You can't just throw money around because not everything is moving. Some quality stocks are coming down, quality groups coming down. Some of the high flyers are suffering some big losses. So if I were to sum everything up, I'd say long term, I'm very bullish. I have high expectations that the market's going to do well the rest of the year and well into next year. But in the short term, I expect a pullback because there are so few good setups to be had. All right. I'll see you next time. Hope this helps.